Today we're going to be building another smart money concepts trading strategy using order blocks. So let's get straight to it. Hey trader devs, I hope you're going extremely well. My name's David and welcome to my channel where I go through trading strategies that I find on YouTube and on the web, and then I use code to debunk the bad ones and find the good ones. Today we're going to be looking at another smart money concepts trading strategy that I'm going to be building here with you on the screen. Something that is started by the Inner Circle Trader, and I've also mentioned another couple of channels that talk a lot about smart money. So one of my favorite trading strategies are the smart money concepts. Today we're going to be looking at order blocks, something that I don't personally trade much, but I do use for Confluence. And as I'm going through and back testing, I am looking at the possibility of making this part of my trading strategy. Now you may or may not know, I actually use market structure, ABC patterns in my manual trading strategy, and I'd like to turn this into a complete bot so that it runs manually, runs automatically in the background without having to play around with all the settings, etc. I feel that market structure is probably one of the best ways of doing that because we're not reliant on volume as much as other indicators and things like that. So it helps us to be able to calculate higher highs, lower lows, and make our decisions accordingly to that. So I guess the best idea is to get straight over to my computer so that I can go through the order blocks and what they are, how we're going to trade them, and how we will convert them into a trading strategy. Okay, let's get over to my computer. Okay, here we are on my screen. This is the one of the indicators that I built. It's the indicator for smart money concepts. What it does is it goes through and helps us to work out market structure visually so that we can make better decisions whilst trading. So what we have here is our market structure creating higher highs. I have done a full video about this, so I won't go into a humongous amount of detail into it, but as you may or may not know, market obviously goes through stages of higher highs, lower lows, creating our market structure. As we're looking for a bullish, we're making higher highs and higher lows. As we're actually reversing our market, we actually come and make an MSB, which is a market structural break. That is our first break in a reversal, which is noted on this indicator just here. So the idea is we're reversing, we're creating a new bullish pattern, creating new higher highs. These lower lows here are strong, and they're pushing to break the previous high and make a new higher high each time. As you can see, they can actually pop and go quite haywire, go quite wild, and push and create these order blocks. Okay, so what is an order block? How is it created? An order block is an area of interest, a supply or demand that's created by a big hedge fund or big bank or a big player in the market. As you may or may not know, most firms, most big players in the markets actually now use algorithms to be able to buy, if they're interested in buying a huge amount or a very large position in something like Bitcoin. And they're not going to do it all at once, otherwise it would create a disturbance in the market, creating one of those absolutely humongous green or red candles, which would push the market and create unfair prices. Not that they care about the fair pricing, but obviously they want to be able to get the best possible prices themselves. So what they do is they cut their positions up into several parts, and then they buy in small chunks, much smaller, much bigger than I would ever be able to afford, but smaller chunks of Bitcoin. So if they're looking for $100 million in Bitcoin, they would cut it up into smaller chunks of $20 million and buy Bitcoin in those small chunks. Now, obviously, those patterns would show up on the charts, and whilst they're buying, these hedge funds, these big banks would like to try and protect their investment, stopping the market dipping too low. So how do we actually find this? Well, it's part of market structure. As we see our reversal with the MSB, we're creating the very last red candle each time here, which would work out something like this here, giving us our market order blocks, which helps us to identify maybe where a purchase would have been made. Now these order blocks are marked out on green in the indicator here. We mark them out with a large candle just like this here. Okay, I've removed my indicator very quickly and moved over to the 1 hour time frame. What I'm doing is going to show you what a order block would look like in a potential situation where we're looking for a trade. So as you can see, we're creating new highs here and new lows. And as we create our new highs, we're actually going to be creating a order block. Now what I'm going to do is I'm going to mark that order block out by a yellow zone here. Now to identify that, what I've done is I've used the new high and then it's come down and created a new higher low. And we're going to mark off the last red candle in that retracement before it pushes back up and creates a new high. As price comes back down, it's going to tap into what we call our order block, which is this yellow zone here where we would get our entry. And as you can see, it would have made an absolutely perfect entry with a risk to reward, which is absolutely amazing. If we would have got our entry just around here, we would have had to have had a stop loss, which would have been relatively small at 0.59%, and we could have had a win, which would have been absolutely humongous in comparison to the risk to reward. But obviously this is completely in hindsight. You'd actually have to work out how to trail this so you know how to take profit. Okay, now in a bearish situation, as you can see, we have our MSB here before changing into a bearish direction. Then we're going to go away, and as we've had our MSB, we're going to mark off the green candles, the last green candles. So one would be here, which would have been a perfect entry. You would have been able to also get in here, which would have been another good entry before price actually dumps. As you probably can see, just by looking at the charts, we are making these blocks all over the place, so we can get great entries quite often as market comes back up and retraces into these boxes before going back in its direction. So what I'm going to do is I'm going to have to go away and code this. Another thing that I'm actually looking to code is the fair value gaps. Now, if you've seen a couple of my videos about fair value gaps are these yellow blocks here that are created by unfair pricing in the market. As you can see, what happens is a candle either pushes very quickly in one direction or the other, creating a gap, this yellow block here. And price generally moves away from that yellow gap before coming back up and testing it, as you can see just here, and making this a fair price again. So it seems to be, it's one of my favorite ways of trading. It definitely is my favorite confluence that I use, are these fair value gaps here when trading manually. So what I've created is a MA, a moving average, which is weighted by these fair value gaps here, which allows us to estimate whether there's more fair value gaps above us than there are below us, giving us a moving average over the past 200 candles. So I hope that's a good enough explanation for what these blocks are. As you can see, they're green and red on the screen. They're made all over the place. There's plenty of them, plenty of great entries to get into. Sometimes they make in a filtering them out and choosing the right ones is always going to be a bit of a problem, but that's something that we'll do inside of our trading strategy. Okay, I guess the best idea is to get over to my computer and start coding, and then I will go away and back test everything so that we can get the best possible entries.
Come on, David, and once again he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD. If he doesn't run into any bugs, there will be a new strategy. Come on, David, hurry up. Come on, David, show us what you got. Come on, David, our patience running out. Come on, David, show us what you got.
Okay, here we are on my computer. I have finished coding this trading strategy. So before I go any further, I have actually used 2 open source scripts inside of my code to be able to create this. The first one is the experimental order block finder, which I used. If you look for order blocks over here, order blocks Order blocks, you will find it here, this one here, and you also have a strategy which helped me quite a lot. So I know this guy is part of my my community, so well done for his scripts, absolutely fantastic. Great inspiration, some of the things that you've actually done to actually make it even better. So thank you for inspiring me to make my scripts better as well. So right, the idea here is, as you can see, we have bullish OBs and bearish OBs. We're actually just going to take our entries as we come and tap into these OBs. So it's very, very simple. We've also created this orange line here, which is a fair value gap weighted moving average, something that I just come up with whilst I was thinking about how to improve on this. What it is it's 200 EMA and it's weighted with fair value gaps. As I showed you, those yellow boxes weight it, so the more fair value gaps above you, the obviously more bearish it becomes, the more bullish it becomes, and when they're more below you, it becomes more bearish. So I have pretty much kept the trading strategy as is, literally as these bullish or bearish entries are made. We come in and tap on them, and as we tap them, we take our entries. So let's have a look at the actual trading strategy and the results that it's getting. So all I've done is I've actually started this new trading type called flippable, which allows us to pretty much ignore the stop losses and take profits. What it does is it only takes profit as a new entry actually comes in, but it does have those protective stop losses and take profits there just in case. Currently it's set up on a high level of 5.6% stop loss, but the reason is, like I said, is they're just there literally to protect you just in case the market does dump or pump in the wrong way against you. I have absolutely zero confluence in there other than that, so I guess the best thing is to go straight over to the actual results that I've come up with. So as you can see, the trading strategy with zero confluence, I will go through a better setup in a minute, has got not bad results. It's got 93% net profit. We have done almost 100 trades at 98 closed trades. This is on a single take profit, not multiple take profits. We have percent profitable of 64%, profit factor of 1.277. Fortunately, the drawdown is quite high. We are using leverage, so that's partially one of the reasons, but yeah, that's what we have as our setup. We are currently on BTCUSDT on the 15-minute. Our Sharp ratio is 0.44, so it wouldn't be good enough for me to actually want to trade this on bots. We did beat the buy to hold return, which we use as our mark. We used, and that is minus 50% on that trading period. So technically it could be considered an alright trading strategy. Our first trade was quite a while ago on the 22nd, so the 5th of the 1st 2022, so about 8 months ago. So yeah, so the actual trading strategy isn't bad, it's quite good, but by adding a little bit more confluence. Now I know that a lot of traders that trade the smart money concepts do not like in the slightest using confluence because it's all about market structure, but I like a bit of a hybrid between the two. So I've actually removed the Saturday and Sunday from trading because it seems that that is not good for this trading strategy. So it can actually exit a trade on a Saturday or Sunday, but will not take any new trades on a Saturday or Sunday. That's why there is this red background. I actually used the range filter in confluence with the the fair value gaps weighted MA here, which seems to have given us quite good entries and given us a bit better confluence than what we would have expected without it. So the range filter is 1, and then if I put up all of the settings here, you'll be able to see that I haven't changed much other than that. If I scroll all the way down to the bottom here very quickly, you'll be able to see that I haven't actually turned on any confluence except for the flat market. Now that's another indicator that I created, which is using the volume weighted moving average, and it's on a length of 100. That gives us the confluence we need to actually improve on this trading strategy and give it the results I'd like. As I said earlier, we haven't got the ADX. The ADX is not turned on. This is about the second or third strategy, but we do have the range filter, which is this red and green line just here. Now, if I pull up the results, you can see that the equity curve looks a lot better. Going for a bit of a bad stage at the moment with it, but we have 69 trades, which is A small pool, but 69 trades is a start. We have 63.77% profitable. Win rate is 63%. We have a profit factor of 2, which is much better. We have net profit of 357%, which is absolutely brilliant. Max drawdown was 23%, so we've completely decreased the it's still quite high. We are on leverage, as I said earlier, so you could decrease that. So that's the setup for that. As we always go through, we'd look at the Sharpe ratio. I would personally trade anything that's above. I personally consider that a trading strategy is tradable when it has a Sharpe ratio above 1. We are at 1.524 on this, and a Sortino ratio of 18, which is very, very good. List of trades is the same as the other one. So as you can see, everything looks good. Thing that I do like also is if I go over to Ethereum, it will also stay profitable without changing anything at all. The equity curve looks even better on Ethereum, except for the max drawdown is at 35%. We have a net profit of 633%, 76 trades closed, a 61% win rate, which is great. Go over to Sol. As you can see, the equity curve doesn't look great on that one. Some of them look great, some of them don't. If you go over to BTCUSDT perp as well, because I like to do that just for overfitting. So what I do is have a look to see whether it works well on that one as well. As you can see, the equity curve looks pretty much the same, which is absolutely brilliant. So I'm extremely happy with the results of this trading strategy. I hope to take it a bit further and find even more confidence and maybe filter out or find more trades and filter out a couple of the bad trades in the future. I will continue building more smart money concepts, trading strategies throughout the month of August, and also looking back at one of the favorites in the community, which is the vector candles, which I kind of consider fits into the same sort of category as smart money concepts. So I hope to see you guys in Discord. You can add this trading strategy to your trading view. The links are down in the description. Have a great day, guys. See you on Friday. Take care, keep safe, keep coding, and I'll see you soon. Goodbye.